If you've been following the news recently, you've probably heard that the Indian rupee has fallen to an all-time low against the US dollar. Now, before you panic, let's take a moment to understand what's really going on and what this means for you and your wallet. As of late September, the rupee stood around 81.6 rupees to the dollar, and just recently we saw it dip even further to 84.4. So why is this happening? Well, one major reason is the ongoing global uncertainty. With the possibility of a global recession, investors have been flocking to the US dollar, which is considered to be a safe haven currency during times of crisis. Add to that the Federal Reserve's aggressive interest rate hikes in the US, and we're seeing the dollar grow stronger, while emerging market currencies like the rupee are under pressure. Now you might be wondering, what does this mean for the average Indian? Well, a weaker rupee affects everything from the price of imported goods to your everyday expenses. When the rupee falls, you need more rupees to buy a single dollar. So a year ago, you needed 74 rupees to get $1. Now that same $1 costs you 81 rupees. And that's a noticeable difference. Let's break it down with a simple example. If you're buying an imported laptop that costs $1,000, just a year ago, you would have paid 74,000 rupees. But now with the rupee weaker, you'll have to shell out 81,000 rupees for the same laptop. That's a 7,000 rupees increase, and it's not just laptops, it's everything that's imported. From groceries to electronics, everything that depends on imports is going to cost more. But that is not all. The rising cost of imported crude oil also impacts transportation costs, meaning your daily commute as well as the price of goods you could buy could see price hikes. However, it's not all bad news. For export-driven businesses like pharma, IT and auto companies, a falling rupee can actually be a blessing in disguise. Why? Because when they get paid in dollars, they can convert that to more rupees, boosting their profits. Take India's pharma industry for example. The weaker rupee makes Indian medicines cheaper on the global market, which means that these companies could see a boost in international sales. But should you be worried? First things first, do not panic. Economic cycles, including currency fluctuations, are nothing new. The rupee has had its ups and downs, and while it's weak now, it's important to remember that the currency markets are volatile. So knee-jerk reactions are never a good idea. How can you protect your wealth during times like these? Here are a few things you can do. Reevaluate your budget. Cut back on unnecessary spending. Focus on what's essential and substitute costly items wherever possible. Avoid holding too much cash. Inflation erodes the value of money. So instead of holding large amounts of cash, consider investing in things that can outpace inflation like stocks or gold. Rebalance your investment portfolio, which means focus more on large cap stocks, which tend to be safer in uncertain times. It's also smart to invest in companies that have strong exports like pharma and IT sectors. And what about our non-resident Indians or NRIs? Well, the falling rupee can actually be a golden opportunity for them. With the rupee weaker, they get more value for their money when they send remittances back home. In fact, remittances to India have surged in recent months as NRIs benefit from favorable exchange rate. Not only are NRIs sending more money back home, but they are also capitalizing on the low rupee by investing in India, whether it's in real estate, fixed deposits, or stocks. It's an ideal time for them to make the most of the exchange rate. So while a falling rupee can mean higher prices for imported goods and an uncertain future for investors, it's important to keep the bigger picture in mind. With smart planning, rebalancing your portfolio, and maybe even taking advantage of the exchange rates if you're an NRI, you can weather the storm. Stay smart, stay safe, and remember, the rupee may be falling, but you don't have to. Stay tuned to India Today Global.